So this is just a quick video to talk you through the key features of the Tomes Homes financial dashboard and to cover how they can be used to help you in your property business and particularly in how you can assess and analyze your own property portfolio performance. So the first thing to say is that the concept of this dashboard is that it's really supposed to be a uh, full historical data source so that you're able to, every bit of data you have in your accounts can be uploaded and stored within this dashboard, so you can at any time go back to a given month to see how the portfolio was performing at that point in time. And the aim here is to take what is in essence very complex and detailed management accounts and distill them down into very easily accessible metrics and graphs and visuals, so that at all times it's very easy to understand how are different elements of your portfolio performing. So bring your attention to this main central box here. This is all about your rental income and how it's been going in terms of your net profits at the end of each month, how much you're spending on your direct costs, how much you're spending on your finance, and that red line in the middle, that's the most important one to take into account. What was your accumulated net profit at the end of each month? So this one is always taking into account a dynamic 6-month period for around the month that you've selected. So below that, directly below that, we've got our top 5 direct costs. So that's just a very quick and easy way to see where is the most of your money going in these direct expenses, where are the biggest chunks of it. You can see here the biggest chunk of income on this rental portfolio is the lettings agent's fees. Coming over here to the left-hand side, we've got our key financial metrics. Now this, I think, is one of the most powerful parts of the dashboard. And the aim here is we're really talking about the operational side of the business, the rentals. And we're distilling down all of that data on your P&L into very clean metrics. And you can see they're color-coded here. The aim is that the red ones are metrics that are underperforming, that are not performing as hoped or expected. The green ones are ones that are performing at expectation or better. This means we can just zero in on those metrics that aren't working, that aren't doing what we expect, and we can say, why is that not performing? Why is that part of my business not working? And then we can just jump in on what actions we might need to take, either immediately or over the next 12, 24, 3-5 years even. What actions do we need to take to improve that metric, to get it performing as we would want? Just thought I'd go through a couple of these to cover them. These are our primary metrics that we've decided for our own personal portfolio, but actually when we work with clients we make these very much a bespoke, tailored thing to the client's needs, so you can choose your own metrics and what you think is important for your business. This is obviously across different business models can be very effective. If you're working service accommodation versus a standard single let portfolio, you may well have different things in mind for what's important to you. The ones we've chosen as, I think, base rate business metrics, the capitalization rate is a way of assessing the value of a portfolio, of a property within your portfolio, the value of your properties versus how much profit you're making on the rentals every month. So you can just see how hard that asset is working for you. And as that rate goes down, you're able to see that actually you've got a very high valued assets that aren't necessarily netting you very much on a monthly basis. The revenue yield here is a very quick look at how much money you've been receiving every month versus what you would expect to receive. So if you are receiving £1,000 a month in rent, that's £12,000 a year. If you only receive £10,000 of that or £11,000 of that, that brings your revenue yield down. So we can always quickly assess how much did we expect to receive, how much did we receive, and if it's too low, what has gone wrong? What do we need to change about that? Loan to value ratio is just looking at the leverage against your banks on your portfolio. Mortgage coverage ratio is looking at how much profit you've got left over at the end of every month after all your standard expenses to pay your mortgages. Direct cost ratio is just one that's talking about how much direct costs are as a percentage of your rental revenue. So you can just see, is that higher or lower than hoped? And the same with G&A expenses ratio here. That's all about your general and administrative expenses, or you could consider them your company overheads. So by having it in this format, we're able to very easily see where are things going well, where are they maybe not going so well, and where they're not going well, what maybe should I be doing over the next 12, 24 months to improve these. Coming over to the right hand side here, you can see that we have the balance sheet that's been distilled down into a simple and easy way to look at it. So you can just quickly check in on your mortgages, potential loans you might have, and your bank balances in your accounts, so that you can just make sure everything's as expected. And that all feeds up into what I think is one of the most useful parts of this balance sheet side, is you can easily see how highly leveraged you are overall. So here we have the liabilities versus the equity, and again a visual representation just to help give you an idea of how much of that value of your portfolio is actually your equity. Similarly, over here on the bottom left of the dashboard, main dashboard, is our assessment of how much we've spent on property purchase prices, then how much we've spent overall on refurbishment costs, and then on top of that, what is the profit we've made through uplifted capital value, through revaluations, or even through sales might be at that point. So we can see how much of our asset value has been created as profit. Again, the whole thing is dynamic. We can see the individual properties and how they're performing, so that if there's any issues, you can hone in on a property, and if there's one that's underperforming, you'll very quickly and easily be able to see it. But really, the power comes in the consolidated element of this. So you can see how your whole portfolio is doing at any one time. One of the key things to say about this dashboard that is very different to what a standard financial professional might present you is that we've really looked at property investing as two very separate forms of return. When you buy a property to hold for the long term, it doesn't matter what the business model is, if you're holding it for the long term, you are generally considering a return in two different areas. You're returning in terms of your operational rental returns on a monthly basis. And that side of the business is covered through these metrics up here and through the graph here. But the secondary type of return is an investment return through the capital appreciation. Now, whether that's capital uplift on an initial refurbishment or capital appreciation over time, it doesn't matter. It's a form of investment return that you are planning to achieve through holding that property portfolio. The problem we encounter is that you have all sorts of costs and expenses that might be related to one of those forms of return, but actually impact how the other one looks. So one of the key examples is refurbishment costs or big build costs. Up front, you might spend 10 grand on a property, and you might see that as an investment in terms of capital uplift, because you might be spending 10 grand, but it's expecting to see a 20 or 30 grand uplift in capital value. And that's where you're expecting to return on that money. But if your normal presentation of that data comes to you, it will look like operationally your rentals aren't making any money, because that will be showing a 10 grand loss or a 10 grand expense against what could be maybe only 5 grand of rental income. So we've split this out. We've really separated this so that you can at all times get real clarity on the operational rental side versus the capital side of the business. So coming down here, you can see this top first part of your profit and loss statement. This is all about the rental. This is all about the operations, and you've got here your standard direct costs. These are costs directly related to renting the property. We've separated out the finance costs so we can get better metrics, and this is your mortgage. And you've got your general administrative expenses, which are basically your company overheads. None of this here is cost related to the uplift in capital on the property. All of that is pulled out to a separate area. And we do this so that we can have clean separation between those two different sides of the business. So here we can see we've got investing activities. This is all about your build and refurbishment costs, your sales costs or acquisitions costs. That's all in investment activities. Again, we've got here financing activities, your borrowing costs on purchase, which are your kind of arrangement fees on loans and things. And you might have other loans and various bits and bobs within this financing activities that, again, are not related to your rental operations. They're related to your bigger picture perspective on that investment portfolio. And then finally at the bottom here, you get to the very important part, which is your cash balance. All of this feeds up into your metrics, into your balance sheet, into your various graphs and things here. And then we can look forwards, use that data to look forwards in time and have ourselves a cash flow forecast. This cash flow forecast here is only a 6-month one on the dashboard, so we get a quick idea of where things are headed. But actually that is pulling in from the budget tab. And in the budget tab, we're actually able to look 12, 24, 36 months ahead if you want. And you fill this out with what you expect to happen with your business, and you're able to see, and this particular one, for example, comes up to the end of 2021. So we can fill out the information for the next 2 years even, and be able to see what does that impact have on our end balance at the end of the month, and how is the property portfolio going to perform during that period of time. So there you have it. That is the Tomes Homes Financial Dashboard. The concept is to get easy access to the metrics and data you need to be able to make quick decisions on how you're going to change, how you're working, find out where the risks are, find out where the elements are that you might not be happy about and what you might want to make changes to, and then to be able to take action off the back of it. This is designed to make your management account a quick and easy process. And all in all, this concept of pulling aside that, or separating out your rental operational income versus your speculative capital appreciation returns is the most powerful way we can come up with to really get full picture of the two different sides of your business investing.